It's a great pleasure to be speaking with Edwin Dande, the CEO of Cytonn. Edwin, thank you for making time for us today.
Thanks a lot, Aly-Khan. Glad to host you one more time.
Thank you. Edwin, we haven't spoken for a number of months, and I was looking through the news flow, and so much has happened at Cytonn. Would you care to characterize to us what's happened in the last few months? Fund manager license I'm aware of, a whole series, funding came in. Would you care to tell us what's been going on in the business?
For sure. A lot has been going on, and maybe the general context for Cytonn, especially over the last few years, is to take advantage of a difficult market environment when people are distracted, and to grow as fast as possible, because when markets are difficult, you can get talent at a reasonable price, and you can get very attractive assets at reasonable valuations. So that's the theme over the last few months, and actually I would say over the last few years. Now, if I were to go to specifics, I would look at it in terms of our key pillars. In terms of people, we've continued to grow. The last time we talked, maybe we were 300.
What are you now?
Currently, we're around 500 people, mainly on the sales distribution side, because you have to stay very close to your client. As the banking sector continues to struggle, we take advantage of that to try and get very good people with bank experience, because they are the access to the high net worth individuals. In terms of product and services, a lot has happened. We announced an acquisition of a 4-acre prime piece of land that we are now at the tail end of closing. We are announcing this week, I can't give the name yet, an acquisition of a serviced office brand, almost 50% stake. I don't know, by the time we met last time, whether we had made the acquisition of Superior Homes, or we had just announced that.
You just announced it.
Yeah, yes. So that now we've already closed. I think in another 1 month, we are going to announce an acquisition of a stake in a hospitality brand. Again, given where the conversations and where the documentation is, we can't give the brand at this point. So essentially continuing to expand the brand. You talked about the asset management license. When we talked last time, we were purely a private markets player. Now we're also playing in the public market, which means we'll be able to offer product for unit trust players, and within a short period of time also to pension funds through the capital markets licensing of the Cytonn asset managers. Now, we got the asset management company license. Instead of spending another few months to try and get licensing for now the specific funds that we'll offer to clients, we also announced and are closing the acquisition of Seriani Asset Managers. Seriani has one of the highest rated money market funds, highest yielding money market funds in the market. So pretty much on products, a lot has happened. Processes, we continue to strengthen our process. And on distribution and sales, I've talked about it. They are the majority of the firm. So that growth from 300 to 500, most of it, or almost substantially most all of it, is on the sales sides of the business. So quite a bit of stuff.
That's a lot, and there's a lot of M&A activity you've done in the last few months, basically. What informs that strategy? Are you finding it more attractive to do bolt-on acquisitions than to go the organic way?
Remember, at the core of Cytonn, we are an investment company. We take capital from our clients, whether individual high net worth investors, whether institutional investors such as Taaleri, or whether diaspora. We get capital. What we have promised them is an above average attractive return. To deliver that return, then you have to find a home for the money. Our first home was real estate. That's why we have 10 projects under mandate, adding to 82 billion Kenya shillings. So we didn't want to have just real estate as the place to invest. So the next place we went into was financial services. I think the last time we talked about our stake in KCB. Now we've taken another stake in NIC.
I think you were the 7th biggest shareholder in NIC.
Now we're actually the 5th largest shareholder in NIC. We like the valuation, we like the management, we like the ethos of the co-shareholders. So we'll just continue to build our stake until a point where we feel that we've gotten it to where we need to be. So moved from real estate to financial services. From financial services, we went into things that were, I would say, related to the real estate business, hence education. When you put up 100 acres of real estate, as we are doing in River and in Ruiru, you have to provide early childhood, primary schools.
So you branding the schools, or you're partnering with people?
We're actually branding the schools, hence Cytonn Education Services, which is actually up and running, has a business manager, a gentleman by the name Ben Ikenye. We've opened our first campus.
Yes, where's that?
In town,
Yes.
Queensway. We've started with tertiary education because we need to train, whether it's carpenters, masons, plumbers, for our own real estate.
So that's the kind of European apprenticeship philosophy, right? That people get trained in a trade, and but that's purely to feed your own pipeline, you're saying?
Our own pipeline will be the catalyst, but they have to go out and compete just like any other college and deliver the return on investment, deliver the best education. We say they have to focus on creating sharp minds. So our own product is kind of a stepping stone, but ultimately they have to be independent and compete in the market and produce talent just like any other college.
So that's the education. Hospitality?
Then hospitality, we have Cytonn Hospitality. We hired a gentleman called David Ndava, who is leading the hospitality team. As I said, they found their first property. They are really at the advanced stages in terms of getting that deal. And I think within the next 1 or 2 months, you'll hear, here is our first hospitality step. So real estate as the core, around it, education, around it, hospitality. Then financial services, which is our investments in banking sector, whether it's KCB, whether it's NIC, and of course now Cytonn asset managers. And we're getting to a point where we feel that we've proven the concept in East Africa, and it's time to now look at other regions. Where can we also do this? So
tell us a little bit about that.
So
where are you looking? Outside Kenya, have you got anything?
Outside Kenya, we are looking at something in Kampala.
Yes.
We are in advanced stages of a JV with a JV partner. But if you follow our research, you'll notice that
you went west.
We went west and started covering Ghana and Nigeria. One of the acquisitions we are announcing very soon has presence in both Lagos and Accra, so they will help us get to those regions much quicker, and then we'll get staff seated there, and then they'll start looking at the same things we look at here. They'll look at real estate, they'll look at education, hospitality, asset management, and see what can we do there that is correlated with what we are doing here. So the strategy still is the same, playing in those sectors and now going west.
Wow, it's really, you've really done a lot since I saw you last, Edwin.
As a team.
Yes, no, of course. Yeah, I mean, with 500 people, if it's not a team, it's not going to be working. No, well done, and I must compliment you on that, because I see you put a lot of energy into building the team, the training, education of the team. I mean, since we've been working with you, I've really noticed that there's a lot of effort going in terms of lifting the level of your staff, and I think it's really a positive sign from what I can see.
And if you look at majority of our people, we got them from college. Just look at Cytonn. Most of the people who are running functions, who are running projects, they are people who we have trained. They've grown over 3 years. So we feel that having the right culture is more important than the experience. When we get people who fit our experience, they can get the experience. And you'll also notice more and more the founding team is pulling backwards so that we can now develop the next generation of leaders for Cytonn. It's going to be very hard to find me on TV these days or in press conferences. You think about the last time you saw me, or the last time you saw Elizabeth, or the last time you saw Patricia, the co-founders now. Shiv is much younger than us, so he's still in the forefront, but we are working very hard to bring the next level of senior managers to be the face of the firm.
And I think that's an excellent development. About 10 days ago, I attended a function at the New Stanley where I think it was Taaleri, who have been a partner of yours for some time, and they were committing, I think, an additional $21 million equivalent. And I was there at the ceremony, and the gentleman made a very, very positive intervention for about 5 minutes, and he was talking about how they support you and how they've been delighted with the returns you've provided. And anybody, frankly, writing a $21 million check has to be delighted with something. Yes. So tell us a little bit about that relationship, and you know, are you growing it? Do you see a bigger opportunity there? When I spoke with him afterwards, he was extremely confident and bullish about yourselves. And I was just wondering, you know, that kind of enthusiasm, what's going on there?
Yeah. Taaleri has been a good story. We met their Africa representative, a gentleman called Auntie.
Yes.
In what I would call the worst of circumstances in the context of the Cytonn story. That was in 2014. We just left our previous platform. We had a whole bunch of lawsuits, but Auntie knew the team. And good investors know a good team when they see it, because they understand that to deliver, you need a team. And you need a team that has worked together and a team that has a track record. So I think he looked at the team and said, I know these guys, I know their track record, and this is the time when I can actually come in, sit with them on the table, and do a deal that makes sense both to them and to Taaleri. People did not know that amidst all those lawsuits and chaos, we were actually engaged intensely in 2014 up to Christmas Eve, drafting documents where we got our first 1.5 billion. That was our first institutional investor, and that made all the difference. What year? That was in 2014 when we signed, and we got it in 2015. And that's the funding that actually helped us get started in Situ Village in Karen, and also Amara Ridge, the product we've just delivered. They were the financier. So that was the first investment in both Amara and Situ. Then they invested in the Alma, our 500 unit. They are the people who gave us the funding to actually buy the land. When we started selling, then we exited them. So that's another project that they've exited. And then the latest one, which is the 21 million or 2.1 billion, that funding is earmarked for the Ridge. But remember how we operate. We have by the last time we were here, we were talking about the Cytonn cash management solution. We've now evolved it into the Cytonn high yield solutions. All our projects, whatever money they have to bank with what we would call our in-house bank, which is the cash management solution or the high yield solution. And that high yield solution then funds all these activities at a rate whereby we can then support the 18% that we promised to our investors. So the funding is earmarked for the Ridge, it's banked with our in-house bank, and then it's accessible. So essentially, if you look at it, it is 2.1 billion that goes to increase the assets that Cytonn is managing, which currently with that investment, I think we now move to 22 billion from the 20 billion we had before.
Wow, it's been an extraordinary rise. Let me just ask you, going back to the cash management tool, which you've now recharacterized as a high yield solution. What is the quantum now you've got in under that high yield solution?
And the high yield solutions, I think now...
Are you still at 18%?
Yeah, we're still at 18%. High yield solution, I would say currently we are at about 11 billion. The last time we talked, we were probably at 8 billion.
That's right. Yeah. So you've seen good demand for it, and I mean, it's a very handsome product, right?
It continues to grow.
I can't think of many other products of that nature which are paying out that kind of money.
And every time somebody says that, Aly-Khan, it really surprises me, because I ask them, but how much are you paying for your loans at the bank as a business? If a real estate developer today and goes out to a bank and asks for a loan, yes, they'll tell you it's 14, but then add all the costs, you are still at 16 and 18. And it's at the Kenya Bankers Association cost of credit website. Just pick a bank, take 1 year money, the average is still 18. So there's nothing we are doing that is out of this world. We have just changed things a little bit. Instead of you taking your 1 million to the bank, you get 0. I go borrow it, I pay an all-in cost of 18%. I just come to you directly and I get it, and I pay you the 18%. Now, the only reason why we are the only person doing it is that we are the only person who actually takes the money and does the development for the sake of the investor. Everybody develops for themselves. So they go borrow money, then they develop. For us, we are saying we will develop for the sake of supporting the 18% return. That's why with all the attacks that people have directed towards the high yield fund or the cash management, it continues to grow because our investors understand the structure. They go out and actually look at the real estate, and they can see that real estate continues to grow. So it's a fund that's very stable and continues to grow.
So let me ask you a question, just doing the maths. You've got 11B in the high yield. You've got another 21, is that correct? How much cash have you got for the pipeline at the moment?
In total, it's 21.
Yeah.
It breaks out to around 11 in terms of cash management solution or high yield solution. I'm still making the transition from CMS to HYS. Okay. Around 11 billion in HYS, that's a high yield solution. Then another 5 billion from Taaleri, that gets to around 15, 16 there. Yes. Then another 4 billion that comes in terms of JV, land contribution, because capital can be in terms of cash, it can also be in kind in terms of people who brought land to us. So the total capital that we have is 21 billion. High net worth investors, Taaleri, land joint ventures.
And is that sufficient to support the 82 billion pipeline, or do you still have to go out into the market and look?
We have to go out and raise another 60 billion.
Yes.
But remember, we don't want it all now.
That's what I mean. It's never going to be all at once, is it?
Yeah. So actually, the way we raise cash is that if we see a lot of cash coming, we could do two things. We could go get more projects, which is what we are doing now, or we could lower our rates to slow down the incoming cash. But that 82 billion is what we shall need over the 5-7 year period for some of these projects. If you take 1,000 acres in Athi River, it's going to be a 15-year project. But on average, I would say it's 5 to 7 years to deliver on all these projects. So of the 82, we already have 22. We need to get another 60 billion. Yeah.
It's a very bold, but really you've executed. You released your results a few weeks ago, as I was reading those results, I saw somebody who was growing a business, was growing it fast, looking to capture an opportunity. It reminded me of sometimes of some of these internet companies where you take a bit of a hit in year 1 and year 2 because you're putting your platform in place, you're putting the personnel. You're building a platform for 5 years in advance. You're not building it for today because in a week it's going to be too small. And I saw a few people sort of comment on that aspect of the results, the operating expenses, for example. Give us your take on the results and how we should be interpreting them.
Obviously, they are our results, so I'll talk about them from my perspective. Yes. But I think there are two issues. One, if you are innovating, you can innovate as what I would call a small enterprise, where you say, I'm going to create this one shop and start selling something, and the cash comes in immediately. Or you can innovate as an enterprise, where you want to replicate the idea very quickly, get market share. If I could use examples, things like Uber, you'll have to make a lot of investments up front. Now, if you're innovating as an individual or a mom and pop, one shop kind of idea, then of course your earnings are just going to grow up. If you're innovating as an enterprise where you want a certain amount of market share, as you're saying, you're going to see kind of a J-curve. You're going to go down and then rise up very rapidly. So there's quite a bit of that in our results, where we are making major investments in technology, major investments in people. You are talking about what has changed. One of the things I didn't mention is that the last time we talked, I think we were 3 offices in Nairobi. Now we have 5 offices in Nairobi, plus Nyeri, plus Kisumu, plus Nakuru. So we need to get closer to our clients. So those investments in terms of offices, rent, people, connectivity, we are going to see it in our results. Now, sophisticated investors, institutional investors, and people who are looking for value understand that you're going to take some hit at this point so that you build that market share. The other thing that's going on is that the nature of our business. Real estate is front heavy in terms of capital. You have to make the investments today, and then you have to collect most of it at the tail end. So you are going to see quite a bit of fair value gains.
I've seen some people query the fair value gain component. Why don't you describe to us what a fair value gain is? I think that's important.
Yeah, I'll use a very simple example. Let's say I buy land for 2 million shillings today, and then I put another 8 million of costs on it, whether it's construction costs, whether it's financing costs. The total cost of producing the unit is, let's say, 10 million shillings. I come to you today, and I'm not incurring the entire 10 million today. I'm going to incur it over, let's say, 2 years of construction. But I know my total cost is 10 million. I come and sell you the house today for 15 million. We have a sale agreement. You have to perform. You've even given me 10% upfront. If you don't perform, I've made 10% or 50. I've made 1.5 million right off the bat. So in most, if I look at our defaults, they are less than 1%. So
is that right?
Yeah, in terms of people who buy and then don't follow through. Once they've put the 10% down, I don't have the number, but it has to be way lower than 1%. I'm just using 1% to demonstrate how low the rate of default is. So I have revenues here of 15 million. They are going to come over 3 years. I have costs here of 10 million. I have a fair value gain of 5 million. Now, I don't book all of it up front.
How much do you book?
I book based on percentage completion. If I've completed, and all of this is not based on what we decide. It is based on accounting standards, which are imposed on us by international bodies and audited by our accountant, Grant Thornton, who's one of the 6 largest accountants in the world. So if I've finished 50% of the construction, I will book 50% of the fair value gain, which is going to be 2.5 million. Now, out of that fair value gain, some I will have received in cash based on our payment method. So if you are, for example, a mortgage buyer who gave me 10% upfront, and then we've agreed that the 90% you can only give me at the end, because your bank is saying I need the house built before I give you all the 15 million. So all they gave you is all you did was to put the 1.5 from your pocket, and the balance 13.5 you'll go get from a bank. I will recognize half of the gain, though I have not received the money from you. So that's why it doesn't make sense to look at our results and back out the fair value gain, because it's operating fair value gain. It is not incidental to my operations. It's not like I'm a hospital that is sitting on land that happens to appreciate. I wake up every day looking for land, constructing and selling and collecting when it's due. So when people say, oh, if you take out the fair value gain, then they made a loss, clearly they don't understand the business. No. The fair value gain
is part of the business.
Not just part of the business, it's the core pursuit of the business. For the real estate business, you wake up every day when your laborers go to site. They are not going to sell houses, they are going to construct, and in that construction, they're increasing your fair value gain. So fair value gain is actually what we wake up to pursue every single day. So when somebody says back out the fair value gain, it's like going to a school where they've admitted students, and the students have only paid a deposit, and they have a payment plan. Then they say back out the receivable in fees to see how much cash they have. You can't back out the receivable. They have a contract with the student. The student will pay over the term. So anybody who knows us cannot back out. In fact, they should be asking, how much is the fair value gain growing? I need to see a growth in fair value gain. I need to see growth in your sales. I need to see growth in your land banking. It is a core metric of valuing the farm.
No, thanks for addressing that, because there's been quite a bit of skepticism, I thought, around that. But you're completely correct. I mean, you've made an investment, the investment has appreciated, and you're taking it on a pro rata basis.
And the investment, there's a contract in terms of the sale of that investment. The one thing I'm not sure I would agree, Aly-Khan, is that there's real noise, because the people who understand the business are very comfortable. If there was real noise, then you'd hear Taaleri or one of our 3,000 investments complaining. When you have a new idea, like the high yield solutions or the cash management solution, it's threatening to someone. Because ask yourself, so these 11 billion, where did you get it? It didn't come from thin air. These were people who were getting substandard returns in the banking sector. We managed to convince them to move that 11 billion from somewhere to Cytonn. Of course, where it came from, they are not happy. Now, you can do one of two things. You can say, what product can I innovate so that I compete with Cytonn? Or you can say, how can I shake the confidence of the people who invested that 11 billion so that it might come back? So what seems like noise is actually kind of a designed plan. Our real investors don't question the fair value gains. They understand it. So when you say that there have been some questions around our accounts or the interpretation, it is just a section of the market, and it is a deliberate design where they take something that is core to the business, they take it out and then present some sort of shaky situation so that they can try and shake the confidence of our investors. And the reason is very clear. The 11 billion that we have in our high yield solutions came from somewhere. It came from the banking sector. Now, the banking sector can do one of two things. They can compete and create products for people who are looking for high yield. Not everybody just wants a deposit rate. Some people want a high yield rate. Or they can find a way to try and shake confidence. Unfortunately, they've chosen the second route, which is to try and shake confidence.
It's probably a low-cost option as well.
It's a low-cost option for now, but in the end, the investors kind of realize, wait a minute, you told me these people have issues, now I understand. Are you really telling me the truth, or you're trying to get my money at a cheaper rate? And I would say that most investors are not stupid. You can shake their confidence for a minute. And in fact, the people who ask us questions when these things are said tend to be people who've been with us for less than 3 months. Those who've been with us for a long time understand the strategy. And it's very deliberate, because when you ask a client, where did you hear this from? It tends to be from a relationship manager who lost money, who lost business from the bank to Cytonn. So they go take this stuff in social media, they send it to their client and say, look, I told you, can you bring the money back? So a lot of this is not people asking, it's being generated from one sector of the economy.
And you know, you've had some, I don't know how to characterize it, some of this content is, you know, you've had some bloggers who've sort of run with some of these stories that we're touching on. They seem to regurgitate the same thing. When I dive into it, I don't really find much content, but it creates a bit of drama and hysteria. I thought you described it best in a response a week ago when you called them nitwits and sad in Trumpian capital letters. So tell us, you know, are these like flies that come and bite you on and off? How would you put it?
Aly-Khan, I'll go back to a statement I made earlier. If you have any product that threatens the established players, they won't take it lying down. The quick examples I could give is M-Pesa.
Yes.
Banks fought M-Pesa until a point reached where they had to collaborate with M-Pesa. Equity Bank, when it started 13 years ago as from a building society to a commercial bank, how many times have you heard people saying Equity Bank is going down, it's collapsing? But today it's the largest bank by market capitalization. There is no option, but when there is a banking issue to be discussed, Equity Bank has to be on the table. When we started, high yield solutions or then cash management solutions, it was threatening to people, and it continues to be threatening to people. And they said all manner of things against Cytonn. They went to all manner of regulators and said whatever they could say. But today, Cytonn has a fund management license. Today, Cytonn is acquiring a fund manager with unit trust licenses. So what you see in social media, and when you see the people who are generating it, these are people who, for lack of a better word, I'll just call it what it is. They are guns for hire. Everybody knows. So the question is, who is paying them to write these things about Cytonn? So there's got to be somebody whose business, an established person who feels their business is threatened, they cannot innovate, therefore they will hire, and there are usually 2 or 3 names. I don't want to name them, but everybody knows them. There are 2 or 3 names who you go to with content that doesn't make sense. It is essentially mudslinging content. You put it on social media, usually Twitter, Facebook. Then their relationship managers pick it from social media and send it to our clients and tell clients, I told you there is a problem. How come mainstream media is not writing? How come analysts are not writing? Our board of high yield solution is made up of bankers, private equity investors, directors in companies. They are comfortable. So why is it that it's only 2 or 3 bloggers who everybody knows is a blogger for hire who tends to write about Cytonn? This is not coming from social media. It's coming from some threatened, established players. But what do they say? You cannot stop innovation. You can only kind of put roadblocks. You can distract it, but ultimately, the reason why Uber works is because people like to take cabs using technology rather than hailing down cabs on the road. The reason why Equity Bank grew is that the unbanked wanted a bank, and Equity created that bank. The reason why M-Pesa works is that people want to transfer money without necessarily going to a banking hall.
What's your raison d'etre then, according to those?
Anybody who has money,
yes,
surely they would rather get 18% on their 1 million than take it to the bank to get 0%. So you'll have to do a lot for them to take money away from us and go back to getting 0%. Now the question is, can I support the 18%? Yes, I go choose things to invest in, real estate, hospitality, education, to support the 18%, as long as I have the return on one side, and our returns are usually 22 to 25%. And as long as I deliver to you 18%, these guys can make all the noise they want. It is unlikely you will move. And even if you move back, after 3 months, you'll realize this was noise anyway. Most of the clients who take their money end up coming back anyway, because they, at least, maybe at some point they'll be a competitor. But at this point, there's no way they'll get 18% per annum.
What is the secret sauce to you consistently delivering these returns of around 22 to 25%? What's the secret sauce? Because obviously, that's how you're going to pay your 18.
Actually, this 22 to 25% is available in the market, and other developers are also getting it. The 22 to 25, that's not the innovation. That one, all other developers, even Suraya, are getting the 22 to 25%.
They're able to cluster around that.
Exactly.
Okay.
The only difference is,
yes,
to get the 22 to 25%, you have to borrow at 18 all-in cost. The only difference is they go to the bank to borrow. And where does the bank get the money? They get the money from you. So the only difference is they are doing the conventional trade. Aly-Khan goes to the bank, puts 1 million. At best, you get 7%. A developer goes and pays the 18% cost of borrowing from the bank, and it takes a whole process, a whole 1 year. So our innovation is not on the return. Our innovation is disintermediating the bank by coming directly to you. The same way Apple decided enterprise entities don't understand my product. I'm going to go directly to the consumer and sell them this proposition of an iPhone. I'll open the stores and go directly to the...
And they never even sold you with any information, right? It was just intuitive. You learned it.
Yeah. And that's, if you ask yourself, why are our numbers growing? It's growing on the sales side. Why are our offices growing? We want to speak directly to to the client. If we try to sell these returns to you, or if we try to get these returns to you through some sort of fund manager or pension fund, they don't understand it. They will take us through hoops. So why do I have to get the returns to you through a pension fund, some enterprise or some institution, or through some unit trust funds? I can come directly to you and tell you, Aly-Khan, here's 18%, this is how I'm generating it, and I will get your 1 million much faster than I'll get it through an enterprise such as an asset manager, an insurance company, or a pension fund. So that's all we've done. The returns, everybody can get them.
Yes.
But how to fund that business, that's our innovation. We've gone directly to the individual.
But also, I mean, looking at the products you've been putting out, you've innovated highly on that side as well. I mean, I've got to compliment you on that because we've looked at so many of them. And again, going back to Taaleri, he was also talking, he said, you know, the old way of doing business is gone. You've got to deliver a much more sophisticated product. How do you characterize your execution on that side then?
For sure. Our execution on that side, the differentiation first and foremost is market research. We do a lot of research because if you have the information where people want to live, where people want to buy houses, if you build, they will live there in terms of renting, or they'll buy. So when I talk about we are doing 10 developments, if you really dig through it, we only do 3 things. We are either developing in Karen. Karen has the highest concentration of high-end private schools anywhere in Kenya. So in both good and bad economic times, people still will want to send their kids. They'll cut down on other things, but where the kid goes to school, they'll still want to send their kids to good schools. And Karen is not only a place, a destination for Kenyan kids. If you look at schools like Brook House, there are a lot of kids there from South Sudan, from Uganda, from Rwanda. Kenya is still a destination for education for the region. So that's why we like Karen, and we have 3 products there. The one we delivered, which is a Ridge, C2 village, 30 acres, which we are starting on. And lately we've bought another 10 acres, it's called Upwood. So 3 products in one location. Why? Because of the fundamentals that uphold the area, underpin the region, the area which is education. Second is Kiambu County. Of the 10 fastest growing towns in Kenya with a population of 50,000 people and above, 6 of them are in Kiambu County. So the demographic support is there. That's why we have in just one spine 4 products. Taraji, which is around, I think, 300 units. Then Alma, which is around 500 units. Then the Ridge, which is around 800 units. And then Riverrun in Ruiru, which is around 2,000 units. So we are developing in an area where people want to live, where there's the population pressure. So again, there's a fundamental that underpins that investment. And then finally, you'll hear people saying, we have vacant office blocks. Then I ask them, but how come you can't get vacancy in offices in 14 Riverside or at Yaya Center? Because Yaya has offices. It's because it's a mixed-use development. You bring retail, you bring offices, you bring a hotel, you bring serviced apartment, all under one use. Mixed use does very well. That's why we've purchased the 4 acres in Kilimani. So at the end of the day, Cytonn does only 3 things in real estate. Current, because of high-end education, rapidly growing demographics such as Kiambu County, and mixed-use development. Now, I don't know which other developer can distill all the activity into clear buckets that are supported by research. That's our differentiation. So picking the spot. Now, once you pick the spot, then the quality of product you have to put on them. I tell people, go look at the Alma in Ruaka and tell me if you can find in that surrounding a better apartment community development. There's none. Go look at Amara Ridge in Karen and tell me, can you find another quality of villa like what we have in Amara Ridge? There's none. So you have to make sure that the delivery is excellent. Everything we try to do at Cytonn, we say, because we don't have heritage, godfathers, history. We'll only compete with the quality of our idea and commitment to its execution.
Thanks very much, Edwin. Always a pleasure speaking with you.
Thanks a lot, Aly-Khan.
Thank you.
Always a pleasure hosting you.
Thank you.
Thanks.